Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program. In the last week, there were a lot of uncertainties, long weekend, US Fed meeting, and a number of other things. And the markets were volatile. But one significant thing is that the previous 2 weeks, on a weekly basis, the Nifty was down. But last week, on a weekly basis, though there were only 3 trading sessions, on a weekly basis, the market was higher. Though there were only 3 full trading sessions, so on Thursday, 1 hour Muhurat trading, so taking that to 4 trading sessions. And not only that, on Friday, the US jobs data, so which came very good, and US markets, S&P 500, Nasdaq, Dow all ended at record high. And SGX Nifty is trading around 18,000. And in fact, it was trading slightly higher than 18,000. So on closing, it is around 18,000. So Monday, our markets are likely to open higher. And Nifty fell from 18,600 to 17,600. So that is about 1,000 point fall. And then started recovering. Now Monday morning is likely to open around 18,000. So 18,000 to 18,100 should be a slightly resistance area, we can say. And because 18,100 becomes the 50% Fibonacci retracement level. So logically, so 18,100 should have some resistance, and if that is crossed, then we can go to 18,300. So anyway, for this month, and 18,600 is going to be a huge resistance because markets fell from there, and TCS from around 4,000 to below 3,500. So I don't think that market will go back to 18,600. So who knows? That may happen if FIIs turn net buyers. After continuously selling for 10 consecutive trading sessions, just one day they turned net buyer, and again they started selling. Even on Muhurat day, trading day, it was just 1 hour of trading. They've sold for 400 crores. So, number one, FII's significance is much less nowadays. And in fact, in the month of July, they've sold 23,000 crore. But now we are at least 2,000 point higher than July. So now the fear must be only on the higher side. So when FIIs keep on selling so much and still markets are holding, what will happen if they start buying? So we have to watch FII space closely, and most of the corporate results are over, but however some more companies like Power Grid, Mahindra and Mahindra, and few other companies, and more importantly Bank of Baroda. So that will decide the PSU bank's rally. So we have few corporate results. So we have usual IIP data, inflation data is there in the coming week, and market, even when the market was crashing, and the 17,500 put option in fact increased in the open interest. So this shows that very, very clearly 17,500 is a very, very good support. So as I said 1 week before, the range for this month is 17,500 to 18,600. So as and when it is at the lower band, so one can consider selling put option 17,500 and below. As and when it is in the upper end of the trading range, you can consider selling 18,600 call option and above. So that should be the strategy for this month. So one significant thing is that I am seeing good amount of selling in Reliance Industries, and especially market is not happy with the Jio numbers, and also their launch of new mobile phone. The pricing was not competitive, so it is breaking 2,500, and recent high is 2,750, so it has fallen 250 points and struggling around 2,500. So Reliance struggling around 2,500, and TCS struggling around 3,500, and Infosys struggling around 1,700. So most of the stocks are struggling. So if FIIs turn net buyers, and then if there is some short covering in these index heavyweights, then we can expect the rally to resume. So, but I don't think that any significant rally will happen in the next 2 to 3 weeks. So one thing good in this month, so we have only 3 more weeks left, and so one public holiday. So factoring in that, there are only 13 trading sessions. So that is actually good for option sellers. So time decay. So there is nothing big or significant in the coming week. So that's it for now. Hope you enjoyed watching to this audio. So I'm in Bangalore for my workshop and charity dinner. So that's why only audio is being recorded. So thank you. Bye.